Hey folks, welcome to the Rate Update with Dan Frio. I am Dan Frio, where our goal here is to educate and inform you guys everything real estate, especially when it comes to the financing options. So on the channel, what we do is we review how mortgage rates open for the day, and then we look at the news, what news should be coming out that will affect mortgage rates. And that's the goal of our channel. And then we sometimes talk about programs and other pieces of the puzzle to help educate you guys in the financing section. So let's go over and see where mortgage rates started today and then start digging into the news. So here's what we have. Here's where rates are right now. Yesterday, if you watched my channel, I said we'd probably see about an eighth of a reduction in rates. And that's where we are on the 30-year fix. We went down an eighth, 0.12. Well, it's actually 0.125. So these are rates that are published by Mortgage News Daily on a daily basis. So we use this as our benchmark. These are not any individual lender's rates. They're a combination of mortgage companies all over the country. So Mortgage News Daily sends out a survey in regards to where their rates are for the day. They compile the data, and here they are. So let's go across this. We're going to look at the rates and also how much the costs are to get that rate. Okay, so let's go across here. The 30-year fixed rates coming in right now at 5.52, down an eighth, down 0.12. That is coming in with points. Okay, so how do you calculate these points? Pretty simple. You can see right down here. Let's rephrase that word points and change it to percentage. So this would be 0.4%. So what you do is you take your loan amount and then you multiply it. You hit times 0.4, hit the percent sign, and then the equal sign. That's how you figure out how much it would cost you to get this rate. But again, this is not at one lender's rates. This is an average rate out there in the economy. So then let's go across. The 15-year fix is coming in down 9 basis points to 4.82, also comes in with a fee. Then you can see the next two columns here there's no fee involved. FHA, we're going to calculate these as the government loan. So let's say the FHA, VA, and USDA would be at 5.12, down 8 basis points, or down 0.08, no cost there. You go to the 30-year jumbo at 4.75, no cost there, and no adjustments. And then the 5/1 ARM, the adjustable rate is coming in at 4.65. It is down 3 basis points, which is 0.03. Comes in at 1 point. So think of that as 1%. So take your loan amount times 1%. You go down here, here's the chart of the last 10 years, and we are at the peak that we've seen in the last 10 years. The trend for the day is awesome. Say positive. All right. So now what's going on with rates? So what we do is we dig into the mortgage-backed securities. This is a bond that trades on Wall Street that is the biggest component of the mortgage rate. Okay. So what we follow here is what's going on to the price of this bond. Okay. As this price goes up, we don't see this often lately, but when this price goes up, rates come down. So this adjustment here, we should see another maybe 0.125 adjustment to rates. So between the last 48 hours, we're probably going to see a reprieve of about 0.25% across the board. All right, here's the chart that we've seen for the last year. And you can see basically, let's go to the last 6 months. Over the last 6 months, it's just been a downward spiral. But the cool part is we might have hit a bottom. Okay, I'm expecting a bottom at any time as soon as everybody just kind of halts, the little bit of quiet out there, and just monitor all the information coming out. So let's start talking about the news and any economic data that should start affecting rates for the day, the week, and what I see in the next couple weeks. So we go to the economic calendar. Really today, all we're going to see here is the short-term energy outlook. I'm not really into that piece of the puzzle. What we want to do is we want to focus in on what the Fed controls, what people are looking at, what everybody's monitoring. Basically, the Fed is in the forefront of everything. So the Federal Reserve was created years ago with two mandates in place. One is maximum employment. So think of employment, okay? The other thing is price stability. So AKA inflation, prices. Okay, so this week, we have some of that data coming in. So on Wednesday, we see the CPI index. You can see that down here is the core consumer price index, measures the change in prices of goods and services, excluding food and energy. Well, that's one piece of the puzzle, but food and energy, we know, plays a huge role in all of this. So then that same day, we're going to have crude oil inventories. The previous reading, we had 1.3 million barrels in inventory. We are at a deficit the last forecast, or right now the forecast is a deficit. Where's that going to be? On my way home last night, I took pictures of gas prices. They were at 450. This morning, I'm coming in and they're 489, a 20% increase in gas prices. That's where a lot of the inflation's coming. Then we see the jobs report. Okay. Again, the Federal Reserve mandate is jobs here and inflation here. Okay. PPI is one of the biggest things that the Federal Reserve looks at. And what is that? The Producer Price Index measures the change in the price of goods sold by manufacturers. You can see that down through here. So that's one of the key components that the Federal Reserve monitors. Initial jobless claims is exactly what it reads. How many people filed initially for the first time ever claiming a job loss? Okay. The previous reading was 200,000. The expectations is 195. In the news, what we're seeing is some good news for those out there that are saying, you know what, investors are buying too much, people are buying too much, bidding up the prices. Well, we finally have some housing supplies set to increase. Well, I got some more news that might help, might not help, but I think it's going to help. Okay, everybody's kind of pleading, okay, let's let all this start to slow down. We're seeing the housing supply going up, but now we're starting to see demand slowing. Okay, finally, this is taking a toll on the economy, the high prices and the inflation and the interest rates. So we go down here, and this is home builders comments in April. Demand is slowing. Let's see some of the comments from some of these home builders. Dallas builder, interest lists are shrinking, where buyers are truly pausing. San Antonio, traffic has been cut in half since the hike of rates. Raleigh, North Carolina, investors' activity has slowed dramatically. Allentown, our wait list is almost zero, and the list goes on and on and on. So I think we're going to start seeing a pause in the buying, okay, and more inventory coming into play. And that's basically what I called last year about this time, but I predicted we would have it by March. So I was about 60 days delayed, but it's starting to come in. We have more supply, less demand. What's going to happen? It's going to start stabilizing prices. Okay, that's what we've all been looking for, just the stability in the markets. But if you're in the market for a mortgage, so if you're building a house, you're probably freaking out because your builder's lender won't lock in until you're about 30 to 45 days out. What are rates going to be at that point? Let's say you're closing this summer, this fall. What are rates going to be? Don't know. I don't know about you, but I don't like the I don't know piece. So I would like to know what my rate is. So call in for our extended lock. It's up to 6 months. You can lock in if you're building a house. There's no skin in the game. You're not paying points or anything for that. If you're out there and you're actively looking for a home and you're like, these rates jumping up and down on a daily basis are driving me crazy. How about the lock and shop? We can lock you in today for up to 3 months while you're shopping for a home. Okay, so what we'll do is we'll get you pre-qualified right now, get an offer letter or approval letter out to you. So while you're looking, you have the comfort of knowing your rate's locked in. We're getting a lot of calls on reverse mortgages now, cash outs, and debt servicing for those investors out there. So if you're an investor and you want to find out some programs on how you can buy more investment properties, the easiest way out there, give us a call. It's called the DSCR program that we offer. It's debt service coverage ratio. So here's our website. Go to therateupdate.com. Here it is. You can get all the information you need from us here. Up through here at the top, there's our phone number, 844-775-5626. You can apply online. You can set up a meeting with us, or you can even chat. So that's it for today. Today is our first of many, many, many. 1 o'clock Central Standard Time today, we're going to do a live chat, basically answering any and all mortgage questions that you have. So I hope you tune in at 1 o'clock today. We'll be there to answer all the questions that you have. But otherwise, thanks so much for watching. God bless. I'll see you at 1 o'clock. Take care. Bye-bye.